we're building a suite of products that is not as reliant on one single partner as our old revenue stream was. So in particular, our so-called zero-click and commerce media activities that we can maybe focus a bit on in future investor meetings will have a much higher share in the revenue mix compared to the Google revenue streams that we've seen in the past.
Hello, you're watching Proactive. I'm joined by Michael Riedl, the CEO of Team Internet. Michael, very good to speak with you. 2025 was a transition year for Team Internet. What's the key thing investors should understand about the progress you've made?
Right. Well, first, Stephen, thank you for having me. Always a pleasure to be on your channel. So what we've seen after this year, 2025, and the final result should not have been much of a surprise, given that earlier this year we announced that we have delivered figures at the high end of the analyst estimate bandwidth. The highlight is that today 80% of our EBITDA, around 80% of our EBITDA, come from our DIS and comparison platforms, the businesses that are not impacted by the change that we've been seeing in the search division. And the other interesting news is also that our commerce media activities that we've been building within the search division also in the meantime constitute a multi-million-dollar EBITDA business, which might also make us reconsider our reporting segments for the coming year, 2026.
Looking at the search business, there was a big revenue drop during the shift away from legacy monetization. How close are you now to completing that transition?
So as we speak, today already 100% of the revenues come from what we last year called next generation monetization technologies. And the interesting thing in here is that our new activities outside the Google universe, so what we refer to as commerce media, already constitute a business in their own right, delivering already a few $1 million of annualized EBITDA run rate.
Michael, as you mentioned, DIS, or Domains Identity and Software and Comparison, made up about 80% of group EBITDA. You're exploring the sale of the DIS segment. Why sell such a strong contributor to the group?
Well, it is about unlocking shareholder value. So it is a business that the shareholders have been invested in for a very long time. It is indeed a great business, as you say, and the narrative that we include in every of our releases is that we will optimize for shareholder value. So the board would only engage with an offer that we believe reflects the full, true, and fair value of this business. And in order to get us there, we've also been optimizing the business for cash flow generation. So you will have seen an uptick in the gross margins of the specific business. And you've also seen a very high cash conversion of the business. So the ratio between the operating cash flow and our reported EBITDA is also at a record high, given that we are optimizing each and every of our businesses for full shareholder value first creation, and then potentially also realization in the case of DIS.
And with DIS, you would expect to sell that for more than your current market capitalization. If the sale goes ahead, how would you use the capital?
So we would use part of it to settle debt that we have, but given that we expect a purchase price that would also exceed our gross debt by a wide margin, we would also then foresee returns to shareholders, in which exact form, whether it would be a tender offer or a special dividend, we would still need to see. Currently, our focus is on optimizing the business for maximum value and then also realizing the maximum value. There will not be a transaction at a value that the board does not think would reflect the full, true and fair value of the business.
Michael, if 2025 was a transition year, what should investors watch for in 2026 to see that your strategy is working?
Right. So we've introduced KPIs in our reporting. And I really invite the readers of the release to look into these KPIs. So, for example, for DIS, the share of non-domain revenue, basically value-added services, is further increasing. So that is something that is creating value. To our comparison business, the expansion out of the German-speaking so-called DACH region is very important. You will also see that the share of non-German sales has more than multiplied by more than 10 times from 2024 to 2025. And then in search, the transition from our legacy format, AdSense for domains, towards the next generation topics is pretty much complete. And we are now talking about nearly 100% of revenue coming from next generation monetization tools. And here again, we're building a suite of products that is not as reliant on one single partner as our old revenue stream was. So in particular, our so-called zero-click and commerce media activities that we can maybe focus a bit on in future investor meetings will have a much higher share in the revenue mix compared to the Google revenue streams that we've seen in the past.
Michael, I hope you'll continue to keep us updated with your progress. Thank you very much for taking the time today.
Thank you, Stephen. Always happy to be here.
Michael Riedl, the CEO of Team Internet Group.